This past week has seen an interest rate hike, the size of which we have not seen since 1994. The Fed is trying really hard to cool down the economy, and that is having an impact on the housing market as well. So what is happening in the Twin Cities real estate market as of June 2022? Well, I'm about to let you know. My name is Schumann. I'm a realtor here, and I'm here to help you as you try to figure out what it's like to live in Minnesota, what the various communities here look like, and what is happening in the real estate market in the area. If you have questions, I would love it if you reached out to me. My contact information is down below this video in the description box. If you're on a mobile device, tap the title and that will pop open for you, or you can just leave me a comment and I'll respond that way. While it's too early to see the effect that this most recent interest rate has had, there have been others this year, and we are seeing the effect of this in the market. The Twin Cities market is generally pretty extremely active from the end of January through May, and then has a little bit of a lull starting in June through August. However, we are still firmly in a seller's market. So we're seeing that lull. Some of it may be attributed to the rates, but we are still in a seller's market. How do we determine that? Well, we determine it by looking at the month's supply of homes available right now, and that is standing at 39 days worth of housing inventory, which means that it would take 39 days for every home that's currently on the market to sell if no others were added. A balanced market is between 150 and 180 days, so 39 days, still very much a seller's market. It's a little bit of a rise over the past month, just a few more days, but it is a pretty significant increase over the beginning of the year when we had enough homes only to meet demand for 19 days. So it's slowing down a little bit. The last time we had a balanced market in the Twin Cities was in 2012. And the past year has been absolutely nuts, with inventory being at a historic low. So by comparison, when we see that 39-day number, it seems like we're coming to a screeching halt, but it's actually just perception. All right, so things sellers need to know is that it is very important to price your home appropriately for the market. Things that happened a month ago to another seller have no bearing on what you need to do to sell your home today. We have seen the number of price reductions on homes on a day-to-day basis increase by 300% over what it was at the beginning of the year. Let's take a look at some other indicators of the changing market. The number of offers being made by buyers is significantly lower than it was a year ago, but the number of accepted contracts is coming in about the same. So what this means is that buyers are not having to try as many times to get their offer accepted. They're writing fewer offers and just getting under contract. I have had buyers in the past year that had to make up to 9 offers before winning, and now these buyers would be facing much less competition. Increased interest rates have made mortgages out of reach for a segment of the population. Cancellation rates on contracts are also up to 10%, and this can be because financing fell apart or because buyers don't perceive that getting any house, any old house, is as valuable as it was just a short time ago. And more of them are willing to walk away and maybe look for something new if things are discovered in inspection. Cash purchases have become an even bigger player as a purchase method. It has consistently been about 17% of offers, and now those are showing up at about 23% of the time. FHA and VA loans are at 3% and 5% respectively, and that is a significant increase as well. In the last year, there were times when we saw VA loans coming in as accepted at 0 to 1%, and FHA was also limping along. How much over asking price are sellers getting? Well, right now, the median is about 101 to 102% over asking price. Last year, we were closing in on about 105 to 106% over asking price last year, while dealing with rapidly rising prices as well. Buyers are including an escalation clause at about 7% of the time, An escalation clause is a way to increase your offer over the next highest bidder. And if it's down to 7%, it means that buyers are not sensing the same level of competition that they were before. Another sweetener that buyers have often used is appraisal gap coverage. That's coming in at 23% of the time. Various points that's been as high as 40% of offers were offering some appraisal gap coverage, and the fact that it's dropped this much is really interesting to me because it means that buyers may not be making those astronomical offers over list that they were before, and also, again, that they are in less competition and feel less pressure to add all of these additional sweeteners to make their offer acceptable. The takeaway here is that things are shifting for buyers and sellers. It's extremely important to understand what is happening in the market when you're getting ready to sell your home, and as a buyer to know that if you are in a good position financially, meaning that the interest rate isn't going to hurt your ability to purchase, you will be facing less competition than you were just a short time ago. Thanks for watching. Please let me know if you have any questions. I love hearing from people off YouTube. Have a great week.